Carmela, you may begin.
She's muted.
Carmela, I don't know if you're on mute or we're just not hearing you.
Hi, I wasn't on mute, but I muted myself and unmuted, and so hopefully you can all hear me. Well, welcome everybody to the Trade Talk Tuesdays Duty Drawback, and I just want to thank Tony Sargis for taking the lead and organizing these great sessions every Tuesday. It's my pleasure to moderate today's event. And before I get started, I would just like to give a quick snapshot of who I am and the agency I work for. So my name is Carmela Mamis. I'm the director of the U.S. Commercial Service New York, which is an agency of the U.S. Department of Commerce's International Trade Administration. I'm based in New York City in Lower Manhattan, and we have 100 offices like mine across the U.S., and we're in over 75 countries in the commercial section of the American embassies and consulates worldwide. So, and our mission is to help U.S. companies export, whatever that might be. We provide export counseling from A to Z. And then our sweet spot is matchmaking with potential foreign partners and customers. So let's get started now. I would like to introduce our featured speaker, Robert Leo, known as Bob. Bob is a partner in the New York office of Meeks, Sheppard, Leo, and Pillsbury. The firm's practice focuses on U.S. and international law and regulations affecting exports and imports. Bob is a cleared advisor to the U.S. Department of Commerce and the U.S. Trade Representative on customs and trade facilitation issues affecting U.S. customer exporters, and has served in the capacity for over 2 decades. And he was reappointed in 2018 by the U.S. Department of Commerce and the U.S. Office of the Trade Representative to the Industry Trade Advisory Council on customs and trade facilitation. And it's my pleasure to say he's also a member of the New York District Export Council, appointed by the U.S. Secretary of Commerce, and he helps support my mission of helping U.S. companies to export. So, Bob, we're looking forward to your presentation.
Okay, thank you. I'll try not to disappoint anybody. Good morning, everyone. I'm Bob Leo, or Leo, which is very much more sophisticated pronunciation. So thank you, Carmela. As Carmela said, we're a law firm. We are a boutique law firm, as they call them, specializing in U.S. export laws and import laws. And Drawback, as you'll find out in this brief primer this morning, is a combination of both. So you need to have both your importer hat on and your exporter hat on, although with the new Drawback law, you don't necessarily have to be the actual importer. We'll get into that a little bit. Even though I'm not dressed as a lawyer today, I left my suit at home. I am in my office, and we are authorized to practice law and also give advice on law, U.S. customs laws and regulations. So let's get into Drawback. You have a Q&A button, I believe, if you have questions you want to ask, and we'll have some time at the end of the presentation to answer some of those questions. So first of all, what is Drawback? Well, Drawback is a term of art that has been used, believe it or not, since 1789. It was an act of Congress that established the U.S. Customs Service in 1789 to collect duties, which was the primary form of revenue for the U.S. government until the Income Tax Act was passed in, I think, 1916 or somewhere around there. And customs duties were the primary source of revenue, and Drawback was there to promote exports from the United States. So what is Drawback? And you've got a little history lesson there for free, just thrown in. Drawback is the procedure to get a refund of customs duties on imported products. And you are allowed to get 99% of the duty back, they keep 1% as, I guess now they call it a convenience fee. I don't know how convenient it is to lose 1% of your duties, but customs will take the 1%. So drawback allows you to get if you brought in a shipment, you paid $40,000 worth of duties, you can get 99% of that back. But what are the requirements for drawback? They're very simple. You have to either export the product or destroy the product. So we get a lot of questions about that because they say, well, it's too, especially now with the shipping rates and the shipping times, it's too expensive to export. We don't need the goods anymore, but we do want to get our duty back. How do we do that? You can do it through destruction of the goods in the United States, and it should be under customs supervision. So just keep that in mind. It's export or destroy. The destruction, export is obvious. It has to be exported from the United States with the intent that it never returns. You can't just ship it across the border and bring it back again. Because if you declare drawback on it and you bring it back again, you're going to pay duty on it again. So you want to export it out of the United States so you get another buyer, or you're returning it to the supplier because it's defective or it's not what you ordered, then you can apply for drawback. It is a it's legally regulated system, drawback. It is under 19, for those of you that are into citations, legal citations, it's 19 USC section 1313. And the customs regulation is 19 CFR section 190. What that means is that you have to follow the law and the regulations. The regulations mirror the law, but they are precise. And U.S. Customs, even though it's exports that are governed by Department of Commerce and Department of State and Census for export controls and export statistics, U.S. Customs is the agency that deals, deals only with the drawback claims. And we'll get into what a drawback claim is. In 2015, a new drawback law was passed, updating, modernizing the old drawback law, but it didn't go into effect with the new provisions and regulations until December of 2018. And it's referred to, if you hear the word TFTEA, TFTEA, it's the Trade and Facilitation Enforcement Act of 2015, and it is that contains the new drawback provisions. What it did was simplify a lot of the drawback mechanisms that you had to work through, and made it more simple to claim drawback. There's some hiccups in it as far as controversial provisions, but in general, it's made drawback much easier. So how do you claim drawback? We're going to just talk about exports right now destruction, as I said, gets into actual destruction under customs supervision in the United States, and I'll mention that again later. But for exports, you now just have to match what was imported with what you're exporting at the 8-digit harmonized tariff system subheading level. So hopefully you're familiar with the harmonized tariff system, but that's the coding system for all U.S. imports into the United States. It's a 10-digit number that is given to a category or to a specific product. So that tells customs the duty rate, tells you the duty rate, whether it's subject to additional duty rates like certain products from China are now. That 10-digit code is what's used to import. For drawback purposes, you only have to match it at the 8-digit level. So before, you had to either match the exact item that was imported with the item that was exported, or there was something called substitution drawback, where you didn't have to match the exact shipment that came in, but if you had existing stock that came in like 3 years before, and then you wanted to export it and claim it against something that was just imported, you could substitute it in. Now you don't have to worry about substitution. Now you just have to say, hey, my items are the same that were imported and exported at the 8-digit level. If the 8-digit code, and this gets a little technical, But the 8-digit code is just another category, what's called the basket category. Then you have to see if it matches if there's a 10-digit number that breaks out your product separately at the 10-digit level that's specifically provided for at the 10-digit level. If it is, you can use the 10-digit. If the 10-digit just says the word other also, which means it's more of a basket category, a much broader category, then you can't use the 8-digit or the 10-digit for drawback. And you're out of luck as far as customs is concerned, but there is a way, if you can match, then you have to go back to match the actual imported shipment to the exported shipment. Do you have to be, one of the questions that comes up is, do you have to be the actual importer of the merchandise in order to claim drawback on the export? And the answer is no. As long as you can prove that it was imported and it matches at the 8-digit level, you can claim drawback on it. You would want to get, and this is where a lawyer can help you a little bit, is you want to get an authorization letter from the actual importer. Say it was another company that imported it and sold it to you, and you want to export it. They don't care about the drawback because they already passed on the duty that they paid in the price to you. You want to export it and get that duty back. You can do that, but you want an authorization letter from them saying that the item is the same and that it was imported. You also want to get their import records, because the drawback is a very record-intensive process. A drawback claim is a very record-intensive process where customs will, if they audit, and audit's a scary word, but and I'll talk about that in a little bit too, but if they look into your claim, your drawback claim, and want more detail, you're going to have to prove that it was imported. If you were not the actual importer to begin with, then that can be difficult. And you need to not only have the letter of authorization, but you should really have the import records from the actual importer as well, or have them supplied to customs through without coming to you if they don't want you to see what the price is they charge you a horrendous markup. They can provide the documents directly to customs that way. You have we'll get back to a little bit of that detail in a minute. You have 5 years from import. This is very important. 5 years from import to file the claim. It used to be a little bit more convoluted, but they've made it simple since the end of 2018. You just have 5 years from the date of import. So for those of you who do import, you have to know it's not the date of entry, because the date of entry can be 10 days. If it comes in by ocean, the date of entry is usually a week or 10 days after the date of import. And if you come in by airplane, by air carrier, then it's usually the same day, or if it's overnight, it's 1 day difference. But you have to use the date of import. You have 5 years from that date to file the claim. So that's a long time period, and that allows for manufacturing using imported components to manufacture another product. It allows you to get enough or have enough duty claims, duty drawback claims, or enough duty at issue also to make the claim worthwhile, because it is an intensive process. And for, maybe for $10,000 in duty, it's a lot to a small company, but is it worth it to go through and try to get all the documentation, file the claim, and do all that for 99, 90, I'm not going to do math. It's too early in the morning, not why I went to law school, but 99% of the $10,000, is it really worth it to go through all of that? But if for 5 years worth, then it makes it a little bit, definitely would make it more worth it to a small company. The claimant for drawback, the entity that files the claim, can be the importer or can be the exporter. So there's no restriction on who can claim. That sometimes, as I said before, you have to negotiate with if it's an unrelated supplier, you need to negotiate with them as to who's going to get the drawback or who's going to file the claim, who wants the drawback rights. I think it's important to know a little bit more about the process. So there are drawback brokers, and some of you on the call may be working for drawback brokers or be a drawback broker. These are customs brokers that specialize in drawback claims, and most of them are automated now. Most of them are very good, and they can put together everything for you in the software program. You provide them the information, they run it through their software program, and then they'll submit it to customs, and customs will work on that. The drawback brokers charge a fee, and it can run depending on the amount of the refund, how many entries are involved, and how many claims are involved. They could run 15%, 20% of the refund amount. It could even be higher. So you want to use a good drawback broker to do it. You can do it yourself. It was made easier in the end of 2018 for a company to do it themselves, but it is, again, paperwork intensive, so to speak, where you have to have all the records, and it can be a little bit complicated to try to get everything in there without the claim being rejected and having to go back and forth with customs. A lawyer we can't file drawback claims. I'm not going to tell you that we can, because that is considered doing customs business. So you can use a customs lawyer to help you know what the law is, what you're entitled to, what the requirements are. But to file the claim, you either need a broker to file the claim for you, or you need yourself to file the claim. Large companies, some of the large companies have their own software programs to claim drawback and do it routinely. Other companies outsource it to customs brokers. What happens, excuse me, what happens once you file the claim? Well, then it goes to U.S. Customs. U.S. Customs and Border Protection has drawback offices. There used to be a drawback office in every major port back a long time ago when I started and had a lot more hair than I do now. It's shrunk to only 4 over the past 5 years. There was New York, Houston, Chicago, and Los Angeles, San Francisco. Most of it was in San Francisco. Since that time, what just happened recently, actually, this summer, is that the Customs and Border Protection took the drawback branches that were kind of standalone entities where there were drawback specialists and put them into their centers of expertise and excellence, which are organized around commodities, specific commodities. Hopefully some of you are familiar with that. There's a textile apparel center in San Francisco. There's a pharmaceutical and chemical center in Philadelphia, New York area. There's a consumer merchandise one in Atlanta. There's electronics out in California, and also, let's see. So they have, I think, 9 different centers, but the drawback people at Customs were kind of put into these centers. We're not sure how that's going to work. We know that some of the people retired. Some of the people that had been there with Customs and drawback for a long time decided it was time to retire, and have retired at the beginning of the year or retiring at the end of the year. So what that means as a practical matter is that drawback is to get the refund. Drawback is taking longer to finalize. You can apply for what's called accelerated payment. Accelerated payment allows you to file the drawback claim, and file a petition, so-called, for accelerated payment, saying that, look, we can prove we did everything right. We have the import and the export documents. This is our package. On this basis, we want accelerated payment. Customs will approve them. In most cases, they will approve them. And then as soon as you file the drawback claim, within 3 to 4 weeks, you'll get your refund. However, it's not final. You have to wait for Customs to finalize, or what they call liquidate, that drawback claim. It's a drawback claim or a drawback entry, as it's called, in order to finally put that aside. That, under the current procedures at Customs and the current lack of staffing and confusion caused by the Cs, because they're virtual and there's different people in different locations, that is taking a while now for the claims to be finally liquidated, finalized. So you may get paid right away, but you have to hold it open on your accounting books until customs says, okay, it's okay. We finalized it, you're entitled to the money, or we found something wrong, we want the money back now. And that can happen. The other thing that's happening with drawback with customs is that your first drawback, if you're a new filer for drawback, you will have your first claim most likely will be subject to what was called a desk audit, which just means that you have to provide all the paperwork for the claim from A to Z to back it up in order for them to look through it to make sure that they're satisfied that your claims will be proper going forward, that this claim is proper and it will be proper going forward. So that takes a while. We've had some claims, some of our clients' claims have been open for several years. If it's a case involved, like the merchandise is subject to dumping or subject to classification issue with customs, and there's a court case involved with the Court of International Trade, that will take longer. And they will stop the drawback claim process until that court case is resolved because they need a final decision on the classification or the status of that claim in order to, the status of that entry in order to finalize the drawback claim. So what all this means, I'll wrap it up here, I think, so we have time for questions, but what all this means is that you really have to, if you want to do drawback, it's worthwhile to do. You have to dot all the I's, cross all the T's, have all the records in order, whether they're electronic or not electronic. You need to have everything together, and you should have a drawback broker or a customs consultant or customs attorney take a look at it so that they can tell you if it's deficient before you submit it to customs, because it literally can sit on customs desk for up to a year before they even get to it, the way things are going, and then they can say, well, you didn't give me this part of what you didn't give me the import, all the import documentation, so we're going to throw this back and you have to start all over again. That's not bad if you're at the 1 year, but if you're close to the 5 years, then that is bad. So I think that's drawback in a nutshell, and I'll be happy to take any questions.
Oh, thank you so much, Bob. You actually already answered the 3 questions I was going to ask, but thank you so much for that really informative presentation and description of the duty drawback. But in summary, I was going to ask you, is claiming drawback a difficult process? The answer is, well, I'll answer these questions just to summarize what you already told us. But
Sure.
yeah, so it can be, it's important to hire either a consultant or a duty drawback broker to handle all the paperwork and insert all the documentation because there's a lot of record keeping. Yeah, it's important to do your record keeping because you will need, that to get reimbursed, and it could take a really long time to get reimbursed if there's any type of issues. Well, and now that these customs duty drawback specialists have been moved to the centers of excellence, it may take a little bit longer, but it sounds like it's well worth it. And you could basically save them up for 5 years. And that leads us to one of our first questions from the audience. Does duty drawback apply to parts that go into another product, or is it just for finished products?
Oh, very good question. So the answer is yes, it applies to the parts. It used to be called manufacturing drawback. Now I think they've lumped it into just drawback. You have to show that the part, what you have to have a manufacturing contract with customs. So it's like a ruling request with customs where you say, this is what we're going to do. This part A is going to go into this finished product B, and then B is going to be exported. And we can prove B was exported. We can prove that this part A was in that part B, the finished product B, that was exported. So yes, it is available. It is still with the 5 years. So you have to have the manufacturing done and exported within the 5 years.
Yeah, that was a very good first question, because I was thinking of asking you the same question when you mentioned something about components. So that was a great question from the audience.
Yeah.
Now, our second question, can you please clarify the date of import? This is the date the product clears U.S. Customs? Question mark.
Yeah, it's actually the date of import is a technical definition. It's the date it enters the customs territory with the intent to unlade, meaning the intent to be loaded off the boat or the airplane. So think about all those ships that are in a single file outside of Los Angeles right now, outside of Long Beach, that stretch out for 12 so miles. So U.S. Customs territory is 12 miles. So if you have a ship sitting within that 12-mile limit, technically that's the date of import. I mean, customs might be a little bit more flexible given what's going on right now, but that's the date of import, not the date it clears customs with the customs entry.
Thank you for clarifying that, Bob. I also thought of another question when you were speaking, and please, audience members, feel free to type your questions. We still have about 4 minutes left, so feel free to type additional questions. But I'm curious if you know the answer. When, let's say you hire a consultant or a duty drawback broker to handle your documentation, but the importer doesn't want to give you their documentation for secrecy, price, confidentiality purposes, how would they know what? Okay, so they could send you a request as a U.S. company who imported the product that they send it to U.S. Customs directly. How does U.S. Customs match up those items? Does the broker get a specific number that they give to the importer in order to provide to customs? What do you, I'm not
Yeah.
sure what the answer is, but hopefully you can tell us.
Yeah, no, that's a very good question. So there's a couple of things in that to address. One is that you would have to share what your drawback claim number or is going to be. Your customer, the importer, would have to share with you the actual entry numbers. They don't have to give you the documents, but they have to give you the entry numbers so you can put them in your claim. And then you file the claim with customs. It would be very difficult to send it in directly to customs because I know what's going to happen with customs. They're going to get 2 different packages on different days, and they're going to have to read to match it up, and they're not going to have time to read, or they're not going to understand it, and they're going to send both back and say, you guys figure it out. So the best way to do it is to either sign a confidentiality agreement with both parties, with the customs broker, consultant, or attorney that you're using to go through the documents, but to file would be the broker or yourself, and say, well, they're not going to give it to you, but to the customs broker, drawback broker, and have them put it together and then file it. That would be the best way to do it. And just keep it separate so that the exporter doesn't see the pricing and the actual import documents. The interesting thing, though, is that the exporter would know how much money they're getting back on the duty. So they're going to they'll back calculate what the price was.
They'll back engineer what the price is, like they do in some other markets.
All right.
So,
So
Bob,
it's better to work
great.
that out at the beginning. It's better to work it out at the beginning, and you may have to share the drawback refund with the supplier because it might be the only way to do it.
Excellent, excellent advice. We have no other questions, so I'm going to ask. I have a minute to ask you one question. You clarified that you're not a duty drawback attorney, but you are a customs attorney, and I know I've relied upon you with many clients over the years to help with specific issues, and as a DEC member as well, you volunteer your time to counsel small to medium-sized exporters at least one initial session at no cost as your role as a district expo council member.
Right.
Can you please describe the areas of expertise that you actually would counsel legally a company? Export compliance comes to mind.
Yeah, export compliance, export controls. So export compliance is also getting it to customs, using your freight forwarder. Do you have an export policy and procedure in place in your company to make sure you're getting the accurate information to get the goods out, that you're doing it correctly, that you're not shipping to any bad actors on the bad lists of commerce. Export controls is a control. It doesn't need a license. Is it subject to an embargo? Is it subject to sanctions? Where is it going? And the big case was Huawei, the Chinese telecom company, where their 50 entities plus are on the entity list, meaning you can't export to them without a license. You have to go through commerce. So we do that as routine. In fact, today's emails, I have about 3 of those questions that I have to get to sometime today. So yeah, we specialize in that as well as on the import side.
That's excellent, Bob. Well, it looks like there's no more questions. We